Okay. So if it is about a life cycle cost, we are looking at the type cost which comes the total stages of life of the product. But you can see clearly that here we have indicated that the company's total fixed production overhead are budgeted to be $72 million each year. And the total machine hours budgeted to be 96 million hours. You can see clearly that here we are going to apply the principle of absorption costing. Yes. There was an element of cost to cost driver to worry us. Simple absorption costing, then we are good to go. So now, if we have gotten an idea that there's an element of overhead, which probably we will need to compute it. There's an element of overhead which we need to compute it. Then are we going to have only the cost of overhead? No, there are some elements. So let's read the question quickly without wasting time. A manufacturing company which produces a range of products has developed a budget for the life cycle of a new product P. The information in the following table relates exclusively to product P. So we have the lifetime deal. Design cost is $800,000. So this is also a cost which comes up based on the stages of life of the product. So we will factor in this value also per analysis. Right. So we have one cost to be 800,000. There's an element over here which we need to be very particular about. There is a decommissioning cost. A decommissioning cost of 20,000. There's a decommissioning cost of 20,000. That gives us 820,000. That gives us 820,000. Then there's another beautiful thing over here. We are saying that direct manufacturing cost. Direct manufacturing cost is $20 per unit. So if I'm able to determine the total number of units, I can estimate the total direct manufacturing cost. So I can put here direct manufacturing. Here on the day, for example, there's no need for me to write this because this is a multiple choice question. So I'll just say $20 times the number of units is what? 300,000. So that's what? 2 times 3 is 6. So I have it here to be 6. Then have how many zeros? 1, 2, 3, 5, 6. Let's say 1, 2, 3, comma 1, 2, 3. So we have 6 million already. But the 6 million, we have indicated that there's going to be a decommissioning cost. Decommissioning cost. And that decommissioning cost is 20,000. So we have it to be 20,000. Do not forget that there was also a design cost. So design cost. And design cost was 800,000, something like that. 800,000. So we move on. Was there any other elements? I can see some element of depreciation, right? And the depreciation cost is 500,000. So I think that so far we have exhausted that with the exception of the overhead. So we come to overhead, O/H, overhead. The overhead here, we are using absorption costing. So the budgeted fixed production cost was 72 million. So I say 72 million here, divided by the base of absorption, which was 96 million. And here we are absorbing it based on machine hours. So how many machine hours do we have? We need to determine the number of machine hours. They said the number of machine hours is 4. So what is 72? What is 72 divided by 96 times 4 times the total number of units, which was 300,000 units. So you see how to estimate it in total. If you want to estimate it per unit, there's no need to multiply by the 300,000. But if I want to get it in total overhead, then I need to do that. So what is 72 divided by 96 times 4 times 300,000? Basically, you might get a figure such as 90,000. Is it 90,000?
900.
So 900 exactly, or 900,000. So 900,000.
900,000.
Okay, so we will now add up all this cost, and this will give us the total life cycle cost. Total life cycle cost. Total life cycle. And what is the total life cycle cost? 6 million plus 20,000 plus 800,000 minus plus 500,000 plus 900,000. That gives us what? So the 900,000 plus the 500 will give us 1.4. 1.4 plus 800,000 give us 2.2. 2.2 plus 20,000, 2.22, right? Plus 6 million. That will give us 8,220,000. So we have 8,220,000. This will give us the total life cycle cost. When you are talking about life cycle costing, a life cycle cost, look at the overall cost, which comes throughout the total or the entire life cycle of the product. We do not even leave one element. But over here, he didn't ask you to calculate the total life cycle cost. Instead, he said per unit. So you slash this by the number of units. And so far, we have 300,000 units. So far, we have 300,000 units. So 8.22 divided by 300,000, what answer are we getting? Can you come closer so that we move quick?
Okay.
So what answer are we getting?
So I'm getting 27.40.
27.40 per unit. Add that.
Yes.
Per unit. So I think that this small example should recap your idea on life cycle costing. Move on to question number 2. Question number 2 is asking something which is also beautiful. They're saying that what is the total number? We read the main question first. The main question says, what is the total number of units which must be made and sold to make a profit of 45,000? So you ask yourself, where is this question coming from? Which topic is this question coming from? The examiner says, what is the total number of units which must be made? Now, which topics in the PM syllabus talks about estimating number of units to be made? We only look at it in the case of optimal production plan. An optimal production plan, if it's not throughput accounting, if it is not key factor analysis, if it is not linear programming, then it's going to be a break-even question. So you see, these are some of the things which actually help us know that the student knows the paper like his or her skin, because here is asking you to determine the number of units which should be made. But which topics actually help you determine the number of units to be made? Here, given a target profit of 45,000, strictly, this is a break-even question. So you now cast your mind and everything to break even, and you are going to solve this question with ease. If you cannot identify what topic the question is coming from, then you are off, right? So that's why all the time say, know the paper like your skin. So let's go through question number 2. A company makes and sells X and product Y. Twice as many units of product Y. That means 2 times Y are made and sold as that of what? X. So 2 times Y will be equivalent to 1 of what? X. Each unit of product X makes a contribution of $10. So if product X is making a contribution of 10, that means sales minus variable cost of X is what? 10. And each unit of product Y makes a contribution of 4. But do not forget that we have already indicated that 2 of Y is equal to, will give us 2 of Y with 1 of what? X. So the contribution for Y, is going to be 2 times that of the 4, which will give us $8 in total. Then what about the contribution for X? So say the contribution for X is going to be $10. So in overall, we get total contribution. So we get total contribution to be equal to 10 plus 8. That gives us basically 18. That gives us basically what? 18. So the total contribution is 18. And we know how to calculate if it is not a single product. This question is a multi-product break-even. So what do? We look at the weighted average of the contribution per unit. But before that, let's put down our formula. The examiner said, what is the total number of units to be made given a target profit? So I'll just say units to be made given a target profit. Given a target profit. What is the formula? If you forget the formula, you are off. So the formula is now going to be what? the fixed cost plus the target profits, divided by the weighted average contribution per unit. So you see, as I all the time say, break even is about formulas. If you do not remember your formulas, that ends the game. So the weighted average of contribution per unit is close. So now you now ask the question, I'm ready to solve you. Where is the first cost? Question, tell me where the first cost is. The examiner has already indicated that the first cost is $90,000. So that's so big, so big. So I'll just put over here my 90,000 here, then plus what is the target profit? It is given. There's no need for you to worry yourself, right? So the target profit is $45,000 what? Dollars. So I'll put that $45,000 here. This was 90,000. I'll put it here, right? So I'll now divide all this by the weighted average contribution. We have already estimated that we have the total contribution, so slash it, then we are good to go, right? So how do we estimate the contribution per unit? So far we have the total contribution. So we have the total contribution, but I don't need the total contribution. So the total contribution is equal to 18. Don't forget, we got that. So that was 18. But I need the weighted average of the contribution per unit. So it's going to be the total contribution divided by the number of units. So the total contribution is $18. I'll just slot in here, divided by, here they have not given us the number of units, but they did a ratio. They gave us the ratio, 2 times y, 1 of what? X. That is the what? The proportion. You don't forget, I said the weighted average is the proportion. So we have it to be 3 units. There's no need for you to go and worry yourself and estimate in a bit. Please do not think that all questions of break-even comes like this. And I've indicated that please, you need to master break-even. That is why these questions are selected. So at the end of the day, I'll now get $6 because 3 times 6 will give us 18, right? So I'll get what, $6. So now that I have my 6, why don't I place my $6 over here? I'm good to go. So 90,000 plus 45,000 give us 135,000. 135 divided by 6, answer. So how many units do we have to produce?
22,500.
So 22,500 units. Please add the unit to it. Somebody might add dollars to it and get it wrong. The examiner saying, what is the total number of units? Your answer should be in units. Case closed. So we have it over here, alternative what? B, case closed. We move on to question number 3. As we move, please, if you have any question, you ask. We move on to question number 3. Beautiful question by our standard. I really appreciate that. What is it asking us to do? Students run away from this and yield planning operational variance, transfer pricing. You need to really approach those areas. So what was the material? You realize that I look at the main question first before I even read the other aspect of the question. And that is a beautiful technique. I think this type of question we have seen similar type before. So you need to really build yourself and do not have challenges with that. What was the material yield variance for March? What was the material yield variance for March? Material. So here we are not looking at material mix, we're looking at material yield. So material yield, what are we looking at? We are looking at the actual quantity standard mix. We are looking at the standard quantity standard mix. That is basically what we are looking at. Now, questions like this becomes a little bit of a challenge to some students, not all students. It becomes a challenge to some students. Now, look at what is happening over here. When we are talking about yield, we are talking about output. During March, 3,000 units of JX were produced. So what has happened over here? We have gotten an output of 3,000. We have gotten an output of 3,000. Now, that output of 3,000, we said actual usage was, what is 13,200 plus 6,500 plus 9,300? Can you get the straight answer?
30,000.
30,000
kg.
So we're expecting that at least the 30,000 kg was supposed to give us how many quantities? Was supposed to give us a total quantity of The 30,000 kg was supposed to give us the 3,000 units in production. We're supposed to use 30,000 quantity in production. But what is happening over here? We have material J per kg to be 5 here. We have it here to be what? 2 here. We have it here to be 3 kg. So what answer are we getting?
10 kg.
So that 3,000 units, at expected 10 kg, right? Expected 10 kg should have given us 30,000 what? Kg. Should have given us the 30,000 kg. But beautifully, what happened? There was something beautiful, which
So
was
the summation of the.
This was the actual we used it.
It is 29.
So then we were expecting to use 30,000 kg to give us the 3,000 output, but what we actually used was 29,000 kg. So that tells you that the net effect is 1,000 kg. So 1,000 kg is supposed to be favorable. So straight away, all answers of adverse are not answers over here. This is not an answer. So I'll just say that this is not an answer. This is also not an answer. But the answers can be A or C. But do not forget that if you look at it critically, can the answer be 1,000? Already the quantity difference is 1,000, which is favorable. So we need to multiply it now. And multiply, that is where the issue comes. A lot of students might not get how to multiply this. At the end of the day, let's look at the monetary value. The monetary value also help us. We have 20 here plus 24, that give us 44. 44 plus 24 give us what? 68. So this 68 divided by what? That 10 kg. You're looking at the price per kg. So that gives us what? Basically 6.8. So we have it to be 6.80 per kg, right? Per kg.
Yes.
We're looking at it in the case of the price per kg. We have the number of kg, which is favorable, but we need to multiply by the price per kg. That's why we were worrying ourselves to go through this analysis. So $6.80 per kg will give us what answer? So that will give us basically $6,800 favorable at the F to it. So my answer for question number 3 is what? A. My answer for question number 3. It is a beautiful question to practice over and over again to cement your understanding. Then move on to question number 4. These are the questions for me. Anytime I'm answering questions like this, it becomes complicated because this is not a calculation which will let me know that I'm wrong or I'm right. So sometimes I tend to wonder a little bit about how to deal with it. But so when I get to questions like this without figures, I become very, very particular because I may get it right or wrong. So let's move on. The question says, which of the following is not? So you see some students starting reading, say, a manufacturer and retailer, you are wrong. Your approach of answer question is bad. You have to start with the main question first. So here, which of the following is not likely to be a potential benefit of introducing the system? When you say this system, what are we talking? This system, emphatic pronoun, this. So there's something that we are basically talking about it. We're being specific to something. What is that system? Let's read the question. A manufacturer and retailer of kitchens introduce an enterprise resource planning system. So I now know that system they are talking about. Right. So the examiner says, which of the following is not likely to be a potential benefit? Will not likely to be a potential advantage. So we have schedules of labor are prepared for manufacturing. Now with an enterprise resource planning system, there's all the time an advantage of scheduling labor for manufacturing. You do not wait for the production to be due and you are now searching for the employee who is supposed to be at that standpoint. This is mostly applicable by Coca-Cola, Nestle, Unilever, those big. At least there's supposed to be an arrangement of this big. That is why we talk about resource planning, and humans, resource, labor is one of the resources. Timing is also a resource. So if we are planning for resources, should it happen that labor will not already be scheduled before production is going to be made? Then that is not resource planning. Because when you are talking about resources, labor is a form of resource. And by planning for labor in production, you need to look at putting the right person at the right point, ensuring that timing and everything, delivery, everything is really on point without delays, without breakages coming from any point. So A is one of the advantages. Let's look at B. Inventory records are updated automatically. This is correct. Because if you do not update all these, then the processes of resource plan is going to be interrupted. Right? Good. We should know that A is taking 300 kg to this point. Not that we are not going to do accounts. No, everything should be programmed that way. Sales are recorded into the financial ledgers. We need to also do that. But what about D? Critical strategic information can be summarized. Here we are not looking at the plan strategy, enterprise resource planning system are not looked at the strategic level. It is looked at the operational level, where production, sales, and then those things are made. Talk about strategic information, you are looking at it at the top level. Meanwhile, this system is not applicable at the top level. So D is not a potential benefit because of the characteristics, right? We move on to 5. 5 says that what is this technique known as? So you are describing a particular technique, and we are saying that, tell us what that technique talks about. This shouldn't be a problem. Different manufacturing accounting techniques can be used to account for environmental costing. Wow. You have indicated already that environmental costing questions will never be calculation. It's going to be theoretical. And when it comes up, if you have not really read the theories about environmental costing, my friend, you're going to find yourself wanting. So one of these techniques involves analyzing cost under 3 distinct categories: material, system, and delivery and disposal. We want to look at this in the case of flow cost accounting, where we look at garbage in, garbage out. Inputs should give us our output, but sometimes some elements of the product will be lost to production. That is evaporation, right? So under the flow cost, we look at material flows into the 3 categories, right? Material, system, and that of delivery. So that is flow cost. Flow cost. Please, if you do not know that, put it in mind. Let's move on. Question number 6. This is basically theory also. Which of the 3 E's in the value for money framework is being measured here? So you see, instead of the examiner asking you to tell him your ideas about 3 E's, this time around, he has given an example, and he wants you to use the example to let us know whether it's economy, whether it's effectiveness, whether it's efficiency. A government is trying to assess schools by using a range of financial and non-financial factors. One of the chosen methods is the percentage of students passing 5 exams or more. So what is actually happening over here? We are talking about the objective. Listen to it. And we have talked about what objective is. If it's objective, it's effectiveness straight away. If it is input, then we talk about economy. If the relationship between input and output, we say efficiency. This bit should be grabbed quickly without delay. A government is trying to assess schools by using a range of financial and non-financial factors. One of the chosen methods is the percentage of student passing. So here we are looking at the output, and that is objective. And that's the right answer is effectiveness. C should be your answer. I think you are cool. Hello, Rosalind, are you fine with it?
Yes, please.
Right. So we are talking about objective or goal, straight away, effectiveness. Which of the following techniques is not relevant to target costing? So which of them are we saying that is not relevant? Value analysis, very, very important, target costing. Functional analysis, important. Activity analysis is also important. Variance analysis is not looked at in the case of target costing. Though somebody just said about target costing, we calculate the target cost, we compare with the expected cost, and we tend to see the cost gap. But we do not see, in the case of a syllabus, we do not have one topic tested in another topic. We need to just understand that. Just in the case of financial reporting, we do not have a standard tested in another standard. So variance analysis is a different topic on its own in PM. Target cost is a different topic on its own in PM. We do not have a topic examined in a topic. And that's why they are all distinct. So how can you have variance analysis as a technique in target costing? In fact, it doesn't apply. They are all having their different assumptions. They do not overlap, or one is not embedded in the other. And that's the answer straight away is B, right? I'll move quickly, then I'll try as much as possible to get something done. Then I'll get back thereafter. Question number 8 says, which of the following would not be an effective control procedure for the generation and distribution of information within the government department. So which of the following would not be an effective control? So the rest are effective control procedure, but there's one which is not effective control procedure. Let's read the preamble. A government department generates information which should not be disclosed to anyone who works outside the department. There are many other government departments working within the same building. So we can bring in bits like firewalls and those things to avoid information moving from one to another. Those are very good techniques to ensure that things are fine. If working from home, departmental employees must use a memory stick to transfer data. How possible is it going to be? All departments, 5 minutes. All department employees must enter non-disclosed and regular updated password to access. There should be password to actually protect one individual, to prevent one individual from entering to another person, performing some transactions in the name of another person, committing fraud in those ways. All authorized employees must swipe an officially issued personal identity card. This is video control procedure in businesses. Where you clock in, you swipe your card, that may control procedures, right? All hard copies of confidential information must be shredded at the end of each day or locked overnight in safe if needed again, right? Good. So the first one is incorrect because this is not practical. In the case of we are not saying it's not a control procedure, it's a control procedure, but here we are looking at it in the context of departments, a lot of departments working in the same building. Then you are now talking about working from home. All these bits relates to controls we put in place. If you have a lot of departments working in the same building, there should be passwords, right? To prevent student worker A from department A moving to department C because there's no password on that laptop, go and create a dummy transaction because we are all in the same department. And C also talks about swipe because still here we are working in the department, in the organization. But if you talk about if working from home, it doesn't meet the context of the analysis that we are looking at because we are looking at a lot of departments working in the same building. You are not talking about working from home. You are absolutely not in the same bracket like what we are looking at. So the answer, which is not an effective, we are not saying it's not a control. It is a control, but it's not effective in this situation. Right? So this is the answer, right? A is the answer. We move on to question number 9, then question number 10. That's where I'm going to pause. Question number 9 talks about a GUI company, which of the following is our Slack resource. For you to identify a Slack resource is not a binding constraint. That means that it is simple, right? We have the value of R here. We have the value of N here. Slot it in this equation. If you have the left-hand side to be equal to the right-hand side, then we say that that resource is a binding constraint. Let's test first of all, labor time. Let's test labor time. So we have 3R, right? Plus 2N should be equal to, if it's exactly equal to 2,400, then that labor time is a binding constraint. So let's test that. 3 into brackets, 500 plus 2 into brackets, 400. What answer are we getting? 3 times 500 give us 1,005, 2 times 800, sorry, 2 times 400 give us 800. So that gives us 2,300. So you see, the 2,300 is less than what we were expecting to be the maximum, which is 2,400, which is 2,400. So labor time over here is a slack. It is not up to, it's not even equal, not to even talk about it being exceeded. So a slack resource is just to say that it is a resource which is not binding. We are looking at maximum of 2,400 hours and you are working below 2,400. So 2,300 is not even equal. If it is 2,400 at the left is equal to 2,400 at the right, that constraint is a binding constraint. And the number of binding constraints will determine the number of shadow prices to calculate. If you have 2 of the constraints to be binding, you should calculate 2 shadow prices. If you have just 1 of the constraints to be binding, you calculate 1 shadow price. So the number of binding constraints tends out to give us an indication of the number, just to say there's correlation between the 2, right? High 1, right? So let's test the other one, 0.5 into brackets. R was 500 over there. Let's do that. Then plus the next guy, 0.4, should give us 400, should give us 410. Let's see what happens. So 0.5 times 500 give us 250. That is half of 250. 0.4 times 400 give us 160. So these two gives us what? 250 plus 160 give us 410. And 410 is equal to 410. So 410 here at the left is equal to 410 at the right. And we can say that machine time is a binding constraint. And because machine time is the only constraint here which is binding, we need to calculate only one shadow price. But the examiner is not asking us about shadow price. So let's move on. But just in case you are asked to calculate shadow price, you should be able to calculate that. Right? So which of the following is a slack resource? It is only the first one, which is a slack resource, and that is labor time. B is a binding constraint. It is not a slack. A slack resource is an underutilized resource. It's an underutilized resource. Let's look at the last question so that at least I can attend to something and come back later on for question number 11 to question number 30 or something. Question number 10 says that assuming no other changes to profit or net assets, what is the return on investment for the year? We have indicated that ROI has been long tested, so you need to prepare yourself for that, right? So what is the revised ROI? First of all, we calculate ROI. We need to calculate ROI by looking at the controllable profit, divisional profit, over the controllable investment. So what becomes the problem over here is how to calculate the investment. Let's read the question and see what happens. At the end of 20x1, an investment center has net asset of 1 million. So their net asset value was 1 million at that point. Annual operating profit was 190. So the old ROI could have been computed as 190,000 divided by 1 million. But this time some situations have come in and the ROI before will not be the same ROI now. And that's why we have a revised ROI. So at the end of 20x1, an investment center has net assets of 1 million, right? And annual operating profit 190,000. However, the bookkeeper forgot to account for the following. So you need to adjust. A machine with a net book value of 40,000. So we have a net book value of 40,000 was sold. If this value of assets is sold, then that 1 million needs to be less than 40,000 because it was part of the 1 million. If it has been sold, it is no more existing, right? So a machine with a net book value of 40,000 was sold at the start of the year for 50,000. So over here, we have proceeds of cash received. So we add that. So we have 50,000 over here, cash, 50,000 cash was received. What else? And replaced with a machine cost of, so we actually took part of our money to still buy an asset and replaced with a machine cost of 250,000. Now, this in some context, I tell students, you can decide not to account for these 250,000. Why? Because you pay cash, which is part of current assets. Please do not forget that when you talk about net assets over here, we are talking about total assets. I think last time you came out with it, minus what? Current liability. And what is the total assets? The total assets is the non-current assets plus current assets minus current liability. Minus what? Current liability. Minus current liability. So we've talked about this. So if cash, we know for sure in accounting, cash is part of current asset. So you pick the cash of 250,000 and you brought in an asset of 250,000. What is the impact on asset? The impact of asset is 0. So instead of the student bringing here, saying that 250,000 cash was taken out and we brought back another asset, you are losing, sacrificing one asset for another asset. What is the net effect on asset? It's 0. So there's no need for you to even account for this. You can even eliminate that. That 250,000 plus 250,000 is not important. You can eliminate that. So by eliminating that, what answer would we get thereafter? 1 million minus 40,000 plus 50,000. That give us 1.1 million and 10 what? Thousand. That would be the value of the what? The value of the assets. But what about the aspect of the operating profit? What happened? Do not forget that during the sale, right, there is going to be a profit realized. We saw that the asset was having a net book value of 40,000. Meanwhile, we sold it at 50,000. So there's a gain on profits. And that gain on profits will be added to the old profits, which was 190,000. So you add 10,000 to it. Because the value of the asset was 40 at cost, and we sold it at 50. So you have gotten a profit in there. And that at the end of the day, the revised profits. The revised profit. You see, this is an aspect of accounting, and some students get themselves in trouble when it comes to data like this. They throw the accounting knowledge away, and matters like this, they find themselves wanting, honestly. As if it is not that student who studied accounting. So thereafter, I have my 200,000. I can divide this 200,000 by the 1.1, and I'll get a revised ROI. As ROI has been examined, you have to recall your bit in the case of RI. RI is controllable divisional profit minus
imputed cost.
Right. So this is where I'll end. I'm going to have a deal with a client, finish it, then I'll get back. My internet is very good, it's on point, so I can get back so that we solve some few. So 200,000 divided by 1.1 billion and 10,000, what answer we get?
Mr. Guessing 0.19.
So we convert it to percentage times 100.
19.80.
So 19.80, the answer is what? B. Okay. So I would want you to continue, right? So that when I come in, if there's any question you can ask so that we can go there. Or if you want me to go through so that at least you can get some understanding, that's so be it, right? But you have a beautiful friend who are here waiting for you for the day of exam. This is coming up. You need to prepare yourself for that. All right. Thank you very much. I'll get back then. Bye-bye.
Bye.